Welcome back to Rich for Purpose. In this video, I'm going to be talking about the company LMND once again, ticker symbol LMND. So, I made a video on LMND yesterday, but I had to make another one today because Citron Research came out with their video about why you should short the stock, and I just couldn't help myself. I had to get this information out to you guys, so hopefully this is the last one on Lemonade. I do. But let's dive into it. The first clip of the video that he made, he's going to be talking about the bad tech of Lemonade. So let's get into it.
Social good. So let's first look at this technology, as they call machine learning technology. It's called Zendesk. They've spent $15 million, that's 1.5, on technology in the past 2 years. Their version of technology is when I went to go sign up and I put my birthday in, it said, hey, Cantor's Rule. This is as much of a technology company as WeWork was a technology company. It's an insurance company. State Farm, Progressive, Allstate, they all have chatbots. They all have the ability to go ahead and write insurance online. It's completely ridiculous. They're doing this obviously to get a higher multiple. But now, here's what's more important, the social good aspect.
Okay, so basically he's saying that they don't have technology driving the company, that they're just doing it for a higher multiple. Okay, so here's what's different than what he's saying. Is in 2017, they spent $60 million on this AI technology. So it's been at the core of the system this entire time. So yes, they only spent $15 million the last 2 years on Zendesk. However, the AI has been driving this company for quite some time now. So there was an interview with the co-founder a couple years ago, and she talked about how AI is underutilized with the internal functions of a company, and that they have a goal to, with the right number of people using technology efficiently rather than oversized workforce with too little to do. So their goal was to utilize AI to perform tasks in the office better and faster and more efficient than what most insurance companies, how their office operations perform. Out of that birthed the bot named Cooper, right? So I'll just read this. At Lemonade, that AI has taken shape in the form of a bot named Cooper. Cooper helps manage developer workflows across the business, assigning tasks to team members and running internal tests with the goal of getting customers the features they need when they need them. Over time, Lemonade expects that Cooper and similar AI will make the company increasingly efficient, keeping costs down and making the business more scalable to handle anticipated growth. So that right there is a differentiating factor from what this guy is saying. The AI is at the core of the system, making the business run better, faster, leaner, and more cost efficient than other insurance companies. Now, this second clip I'm going to play, he gives a price target and he says a couple of other things. So let's dive into this one.
Oddly enough, if they wanted to go ahead and really do something charitable, what they should have done, the insiders, is donated a few million shares to charity, marked it at yesterday's 165 price, because they're not going to sell the stock anything higher than that in the next few years when the stock goes back to 50 and get the write-offs for the next few years. That's really the way things are done. You want to know what this company is? It's playing on you. It's playing on the millennial investors. Go look at their Twitter from just 2 days ago. This is how they want to appeal themselves. You should buy insurance through Lemonade because insurance is effing awesome. And they actually use the F word. In 20 years, I've never used the F word for no other reason but just respect for the process. Insurance is effing awesome. That's their differentiating factor between them, Progressive, and State Farm. The underwriters know the stock cannot be more than 85. What's taking it higher is who knows. But please, for this company and companies going forward, there are a lot of companies doing great things.
Okay, so he said a lot there, but basically his price target's 50. He said it's never going over 165. He said the underwriters won't pay more than 85. And he said that their differentiating factor is that they use the F word in a tweet when they're trying to be cool with millennials, okay? The underwriters will pay more than 85 because they just did a stock offering. They just sold 3 million shares, okay? So that, come on, that debunks that there. The second is the differentiating factor. Now, here's what structurally makes this company different. The other pillar of Lemonade's customer-centric focus is in how it aligns its financial interests with those of its policyholders by obtaining reinsurance for such large portions of its potential exposure. So, if you are with State Farm or Progressive or whatever, and you file a claim with them, it comes out of the pocket of that company. It comes out of the pocket of State Farm or Progressive or whatever. And they're going to fight you on it. They're not going to want to pay you that money. They're going to fight it. And sometimes you have to go to court to even get what is rightfully owed to you. Not with Lemonade. Lemonade, what they do is they purchase reinsurance products. So when you go and get a policy from Lemonade and then you file a claim, they go and get the money and they give it to you. And they want to do it quick or else it's going to come out of their pocket. And that's why the customer service is so much better, because it's in their best interest to get the money to you fast. It's in their best interest to execute the claim quicker and faster rather than delay, and then reduce the cost of what they pay out. And that's why the customers are going to be much more happy with this model. And that's a differentiating factor with the customer side of things, right? So they are different. They are set apart. Their whole business model is set apart than a legacy insurance company. And second, the price target. Saying it's going to go down to $50 a share and it will never go to $165 again. Here is why he is dead wrong on this, okay? The co-founders, one owns 3.4 million shares, the other one owns 3 million shares for a combined total of $1.1 billion, right? It's an $8 billion company, and the co-founders have a $1.1 billion stake in the company. That is huge. Not to mention, both entrepreneurs are part of a joint investment committee controlling the nearly 12 million shares, okay? So in combine this, that's $3 or $4 billion. That in an $8 billion company, $3 or $4 billion, that's almost half the float of the entire company. So you're telling me that they are out there scamming people to raise more money for their company, to put their $8 billion at risk? That makes no sense. Why would they go out and scam people and try and get a quick scheme off of it, millennial investors, right? But then put all their skin in the game. They go and put all their money in something that, if it's in their best interest that the stock price does good, it's in their best interest that they execute on their growth goals, it's in their best interest that the company grows and grows and grows and performs better and better, and they're betting the house on it. They're going all in on this one. So for him to say those things, it doesn't line up with what logically makes sense that a CEO of a company would do if he really is not about helping out his investors. And then what he said about the SEC and investigating their charitable donation program. Okay, if they say they're giving away money to charity and they're giving away $1 million, they're giving away $1 million. They're saying that they're giving away all this money and they're only giving $1 million. The SEC is not going to do anything because they gave away $1 million. Now, if they went out and said, I'm giving away all this money, and they don't give out any of it, then I can see the SEC coming in and saying, okay, well, why did you fraudulently tell people you're giving money away to charity and you're not? But they are. So his claims are baseless. Nothing he said in this video fundamentally changes anything. None of it was groundbreaking. And why is he going after Lemonade? Of all people, why Lemon? Of all companies, why Lemonade? There are so many other companies out there that are fraudulently scamming their accounting metrics, that are doing so many other shady things. Why would you go after Lemonade other than the fact that they're expensive? And guess what? Investors know they're expensive. We all know they're expensive based on traditional insurance value metrics. They are expensive, but they're not a traditional insurance company. They're shaking it up. They're changing it. And with innovation and change comes people like this that don't like it. And just with Tesla, and this guy was touting, he was doubting Tesla and shorting Tesla and making all these things on Tesla until he switched it up. So I can imagine in a couple of years he's gonna switch it up on this one too. It's just innovation and change drives people to not like it and resist it. Now, there is a risk with this company, and I'm shocked that this guy didn't point this risk out. It shows that he did not do his research into this company as deep as he should have, because there is a risk, and if there is any risk, this is the biggest one that could bring the stock price down. Finally, from a business perspective, Lemonade's biggest risk is maintaining healthy relationships with reinsurance providers. Being able to obtain reinsurance is the core of what aligns Lemonade's financial interests with those of its customers and builds mutual trust. But if reinsurance market lose capacity to handle Lemonade's business, it could threaten the whole business model. If Lemonade grows too fast, or if like a catastrophic, if something happens and the reinsurance companies don't like doing business with them anymore, then yes, that would put Lemonade at risk. But that's not happening here. And then and it is a risk of happening, but there's no sign of that happening yet. So, and here's another thing, is as we pointed out last month, Lemonade isn't free of risk. Whenever you have a new company with a promising but unproven business model, there's always the possibility that it'll make mistakes. In fact, it's likely that mistakes will happen. But that's the value of having smart leadership on board to make course corrections as necessary. And that's so true. And that's why I'm investing in Lemonade rather than Root. Because I feel like Lemonade will be able to, not only on the growth prospects and stuff like that, but I feel like Lemonade's leadership will be able to guide the ship through tough times better than, say, a new team like the people at Root. So those were the things that stuck out in the video to me. I had to make this video to debunk a couple of them for you guys. So please give the video a thumbs up, subscribe to the channel, click one of these links to watch another one of my videos, and God bless you guys. Thanks for watching and have a good one.